Record keeping can literally make or break your business. So don't yawn and turn off. This one is important. If record keeping for your small business feels messy, stressful, and always late till tax time, here's the thing. This one habit can save you thousands of dollars and hours of sleep. So if you don't know exactly where your numbers are sitting right now, stay with me, because today we're talking about record keeping for small business, why it quietly causes fines, stress, and cash flow pain, and how fixing it is way simpler than most people think. In the next few minutes, you'll learn the records the ATO actually expects you to keep, how long you need to keep them, what most small business owners get wrong, and the easiest way to stay compliant without turning into a bookkeeper. And later I'll show you a simple system that you can apply straight away, even if you hate paperwork and you've been winging it up until now. And if you'd like some extra help, make sure you download our free record keeping guide. The link is in the video description and on the screen. Here's the thing. Most small business owners don't ignore record keeping because they're lazy. They ignore it because it feels boring, confusing, or overwhelming, and they're just busy. It always drops to the bottom of the list. But record keeping for small business isn't about paperwork. It's about control. When your records are right, you know where your money is going, what tax you actually owe, whether you can afford that next new team hire or piece of equipment, and whether your business is really making money. But when records are sloppy, that's when BAS panic, tax time shock, and ATO letters show up. Now let's get clear on what the ATO actually wants. According to the ATO, every Australian business must keep records that explain all income and expenses. The best way to do that is to use an accounting system like Xero or QuickBooks. You must be able to show how you worked out figures in your tax return and BAS. The records must be in English or easily translated, and must be stored safely, whether digital or paper, and most records must be kept for 5 years. That's 5 years from when you prepared the record, purchased or sold the asset, or from when you completed a transaction. Now let's break it down to the main categories of records you must keep for 5 years. Income records. This includes invoices you issue, sales receipts, EFTPOS and bank records, and online platform reports. If money comes into your business, the ATO expects a record of it. Expense records. Every deduction you claim must be backed up. That means supplier invoices, receipts, bank statements, loan interest statements. No documentation means no deduction. It's that simple. So many business owners say, but it's only a small expense. So they skip the record. But all those small expenses add up fast, and that's real tax money that you lose. Asset records. If you buy tools, vehicles, equipment or computers, you need purchase contracts, invoices, depreciation records, and disposal details if you sell them. This is where record keeping for small businesses gets expensive when it's wrong. Poor asset records often mean missed depreciation or overclaimed deductions. Employee and contractor records. If you have staff or contractors, you must keep payroll records, superannuation payments, timesheets and contracts. And yes, this includes casual staff and family members. The ATO does not care if your cousin is helping out. You need the records, and again, the system like Xero can really help you stay compliant with all of this. GST and BAS records. If you are registered for GST, you must keep tax invoices, adjustment notes, and calculations showing how you worked out the GST. Again, Xero will produce reports to help you with this. Let me tell you about a client experience. A small family-run trade business came to us already stressed. BAS was always late, tax bills were a shock. They felt that they were working hard and just never getting ahead. Turns out their record-keeping system had real problems. They mixed personal and business accounts, had missing receipts, were guessing GST amounts, and reconciling only once a year at tax time. Once we fixed their record keeping, everything changed. We separated accounts, moved them to cloud accounting, and set a simple weekly habit. It took just 1 hour per week. Within 6 months, BAS was lodged on time, tax bills were predictable, cash flow improved, and stress dropped massively. Same business, same income, just better records. Now let's talk about digital versus paper records. The ATO allows both. But digital records must be accurate, readable, secure, and easily accessible. Scanning receipts is fine, photos are fine, accounting software is fine. What's not fine is losing them. CPA Australia strongly recommends digital systems because they reduce lost records, simplify BAS and tax, and can help improve cash flow tracking. And honestly, in 2026, paper-only systems are asking for trouble. Here's a simple system you can copy. Step 1, separate your accounts. If your personal and business money is mixed, record keeping is always messy and time-consuming. All of those personal expenses do not need to be recorded if they are paid from a separate personal account. If they're paid from a business account, you must record all of the transactions. So separating the business account is an absolute must. Step 2, use one accounting system. Choose one platform, use it consistently. Don't mix spreadsheets, apps, and shoeboxes. I strongly recommend Xero. It's not the cheapest subscription, but it has so many time-saving features for you and for your accountant, and it pays for itself in no time. Step 3, capture receipts immediately. Snap the receipt, upload it, done. Don't tell yourself, I'll do it later. Later never comes. Make a habit of doing it immediately. Step 4, reconcile weekly. 15 to 30 minutes once a week beats 2 days at tax time. Now let's clear up some common myths. I don't need records because my accountant handles it. Truth. Your accountant can only work with what you give them. Poor records really do mean increased accounting fees. Myth. Bank statements are enough. Truth. Bank statements don't show GST or deduction details, and the ATO requires you to have invoices supporting all expenditure. Myth. The ATO won't check small business. Truth. Small businesses are regularly audited, especially for GST and cash income. And if the ATO makes an adjustment because you were reckless, it can be very expensive and penalties and interest. Record keeping isn't about fear, it's about confidence. When your records are clean, you make better decisions, you sleep better, and those tax nightmares stop. Now, sorting your bookkeeping puts you on solid ground, but it doesn't tell the full story. The real insight comes from knowing how to read your profit and loss statement. In my next video, I'll show you how to read it properly and how to use it to make better business decisions. So don't miss out. Now remember, as always, this is general information only and it doesn't take into account your personal situation. Every business is different. If you're unsure how this applies to you, get specific advice about your circumstances. If you're already a client, we can talk about this at our next complimentary tax time meeting. And if not, you can arrange a meeting to discuss how our services can help you. Before you go, if this helped you, please like the video, subscribe, and drop a comment below. Tell me, what's the hardest part of staying organised with your records? And if you want weekly tips just like this to help your business, sign up for our free weekly business tips. The link's in the description. I'll see you next time.